Welcome to etvFutures.com. It's Thursday, November 15th. I'm Amy Hookie for Commodities Recap. In today's session, NYMEX crude oil futures declined after the latest CIA report, which showed a rise in U.S. crude inventories. Also, OPEC reduced its growth forecast for global oil demand. Earlier today, the EIA reported that crude inventories rose by 2.8 million barrels to 314.7 million in the week ended November 9th. The benchmark crude contract fell $2.09 to an intraday low of $92 a barrel following that report. At the end of today's session, crude oil for December delivery closed down 66 cents at $93.43 a barrel. The EIA also reported that U.S. refineries operated 87.7% of their capacity last week. For the session, December RBOB gasoline fell 3.42 cents to close at $2.33.62 a gallon. December heating oil fell 1.47 cents to close at $2.55.87. The EIA also reported that U.S. nat gas inventories fell 9 billion cubic feet for the week ended November 9th. At the end of today's session, December nat gas fell 13.5 cents to close at $7.70 per million BTU. And in the metals complex, COMEX gold futures tumbled $27 an ounce today. That is a sharp reversal from gains in the prior few sessions, and this came as the U.S. dollar rose against the major currencies. December gold ended down by $27.40 to close at $787.30 an ounce. Today I'm joined by Bobby Firestone, analyst at Alaron Trading. He'll weigh in on NYMEX crude oil and COMEX gold futures and also give us his short-term commodities outlook.
Well, today we saw the crude bulls basically get stabbed in between the shoulders. This morning the inventory report came out a day late because of the holiday, and the estimates I was looking at were roughly 3.5 million barrels off. The estimates were looking right around a draw of about 700,000 barrels on crude. We came in with a build of 2.8 million barrels. Now, logically, this makes sense. When we think about the entire inventory supply line for crude, where it comes out of the ground to get to the refineries, well, the refiners have been pushing off, attempting to not buy because the price has been so high. Well, they can only last so long, so they're going to have to buy, and overall it's going to make the inventory numbers skew, or in this case, unskew, back into the favor of a build. So I think we're going to continue to see a series of steady builds in the inventory numbers as we see the model return back to a more normal state. Now, we combine that with the global energy forecast that came out earlier this week. $100 crude not looking like quite as much of a sure thing. Now, we had record numbers of $100 a barrel crude strike price crude options expire worthless earlier this week. Now, overall, I'm going to say at this point, with what we're currently seeing and what I see on the horizon as potentially pushing this higher, really, even though we're at 93.33 on the December contract as we speak, chances are, on a front month basis, we're probably going to see 60 before we see 100. And realistically, the dollar slide, while it has, and it's definitely slowed down, I don't think there's too much more downside there, which is going to prevent the inflation question play continue to push it higher. We're seeing a trickle down effect. We're seeing just buyers are not coming into the natural resources. Gold and silver have gotten slammed as well. Gold, we're back down. We're below 800. Today we're down over $26. We're in 787.5 as I speak right now. Now, long term, I think a gold buyer would be wise to at least look at acquiring some here. We could see another rally coming up. And so overall, I'm liking the downside on crude. I'm liking the long side on gold for a longer-term play.
That was Bobby Firestone, analyst at Alaron Trading, with his commodities commentary. I'm Amy Hookie. Join us later for PM Exchange right here on etvFutures.com.